Hello, young traders. Doing over there from DRFX, Swing Trading Mentoring. Going to be taking a look at the situation on the Euro US dollar currency pair, which, based on the daily chart patterns that we've seen so far, looks as if it's in the process of starting a major trend change bullish above the strong downtrend line. And based on the patterns that have been formed so far, it looks as if it could be doing this with a bull crown setup that would start this bullish trend and the trend reversal. Now, most of my trading is done within the context of consolidation. So this analysis on the Euro US dollar is actually going to be a little bit different because of the setup that has been formed so far on the daily chart. Of course, market direction and trade execution is done within the context of the daily chart and the 4-hour chart. These are the time frames that I use for my trading and analysis. And once a trading opportunity has been identified, then entry will take place using the signals and patterns provided by the 4-hour chart, with the patterns of this time frame also used to protect the trade until the trading target has been hit. Of course, for the most part, we aim to capture a trading gain of between 50 and 70 pips within 24 hours using the signals and patterns provided by the daily chart and the 4-hour chart. Now here you can see the setup on the daily chart of this currency pair, where the market had formed this downtrend as part of this recent downtrend in favor of the US dollar. But as you can see, this downtrend has gradually come to an end, started to move sideways over the last couple of weeks. And based on what we're seeing here, it looks as if the market is undergoing the transition to start an uptrend in favor of the euro. And based on what I'm seeing here, it looks as if this could be taking the form of a bull crown setup. So this appears to be the left tip that was formed as part of the previous downtrend. And the U-turn that took place to end the downtrend would be the center tip. And this pullback that took place above this downtrend line appears to be the right tip of this formation. And so the expectation is that if this is in fact a bull crown setup and that we're going to see the market start an uptrend, then we would need to see the market provide us with a strong bullish signal at this area here that would break this counter trend line setup and indicate the start of this uptrend. Now here you can see an example from the trading manual of bull crowns and bear crowns, where, as you can see in this example, this is the opposite version. This is the bear crown setup, which is basically the same thing, just in reverse, where what the market does is that it ends the previous trend with a last setup that would be the left tip, and then the center tip is formed as the market reverses and starts to break trend lines that would have been formed along the way. So as you can see here in this case, this is a downtrend line, and the U-turn that started here created the center tip and has broken out above this downtrend line, even though somewhat briefly, not that convincing as yet, but it is starting to break this downtrend line that has been formed along the way. And the right tip is formed as the market breaks above the trend line, the previous trend line, forms the setup, and then the break of that setup is what is going to lead to the start of this reversal. So what we need here is for the market to break above this counter trend line setup with a strong enough bull crown, bull signal that indicates that we're going to be seeing the market start this uptrend. Now on the 4-hour chart, as part of that expected rally, we did start to see the market provide us with bullish signals in the form of this double bottom formation, followed by this bull candle here that was starting to break above this resistance area here. So based on this pattern, it was expected that this was gonna start the rally that will lead to the bullish signal on the daily chart. However, what I realized is that to actually try and trade this would have been a little bit risky, mainly because this setup that was starting this trend change was a little bit large. And usually my preference is that if we're going to be trading a trend change that is taking place on the 4-hour chart, the preference that I have is that the setup be a lot narrow, be fairly narrow, because the more narrow the situation, the more narrow the setup, the greater the chance that it will actually lead to a successful movement. The wider it is, the less of a chance it will do so, and the greater the possibility that the market could reverse. So even though over the long term and eventually the market could actually start to move bullish, trying to anticipate that movement using a 4-hour chart can be risky if the setup on the 4-hour chart is this wide and elaborate. So the possibility existed that the market could reverse despite the strength of these bullish signals. And as you can see here, this is exactly what took place. The market the market essentially reversed and took out these bullish signals. And if you had placed your stop loss anywhere along this area here, above this area here, you definitely would have been affected, unfortunately, as the market reversed and is now appearing to be possibly going to be reversing, or is going to continue to move sideways for a little bit longer before either breaking out bearish or rallying as expected to complete the formation of that large bull crown setup on the daily chart. So the market reversed as I expected. The overall setup was that the market was expected to form appears to have formed a bull crown setup to start a trend change. And the 4-hour chart had started this move with a bullish signal in the form of the double bottoms and the bullish candle. But my concern, I was actually contemplating trading it. But in most cases, when the market is forming a setup that is a little bit too wide on a 4-hour chart, then it is usually fairly risky to trade because it opens up the possibility of reversal and that the market could change its setup to something else before it actually moves either in the direction that we were expecting or in the opposite direction altogether. So the narrower the setup, the better the chance that the 4-hour setup that we're going to be trading will actually lead to a profitable movement in the direction that we're projecting on what we're seeing on the daily chart. So we're going to be monitoring the Euro-US dollar over the next couple of days and see if there's any setup that we could trade. But right now the situation looks a bit complicated, where the market right now has somewhat of a 50-50 chance of moving both bullish and bearish over the short term. Over the long term, it's still looking bullish in terms of based on the bull crown setup, but in the short term, based on what we're seeing now on a 4-hour chart, we could actually see the market move sideways for a little bit longer before deciding on its long-term direction.